Okay, welcome everyone. This is just a Stock Picks Made Easy presentation. We're going to do a bit of a webinar tonight, running through cycles. We're going to look at current plays that are happening at the moment, and also looking at a gold play that can occur once a month. I just want to show you cycles that have been repeating for the last 18 months. So it's been, pinpointing some key levels of highs and lows, and showing reversals in the gold, which respond with the S&P 500 as well. So it'll be a good one to look at as we go through the charts. So getting back to what we're going to look at here, I'm just going to nominate some of these. Let me just get this up one sec. Okay, so first of all, I guess I have to just bring up the disclaimer as well. So this is for educational purposes. It's not intended for investment strategies or recommendations. If you've got a financial, I don't take into consideration your financial situation, but if you want to speak to your financial planner advisor, please do. But this is just for educational purpose, to show you how cycles work in the market. But before we get started as well, this is one thing that I'm quite passionate about as well, because I've found over the years in studies that I get the best results by actually practicing, doing these webinars, talking with clients, talking with friends, and just sharing what I'm learning. And what we tend to do, this was a Edgar Dale, which I might have shared with the team before. It's about cone of learning. So, if we're just passively reading something, we retain probably about 10% of it. If we hear it, again 20% and 30% if we see it. But when we actually hear and see, watch a movie, visual receiving, it's about 50%. But really the best practice is actually participating in discussion, asking questions and doing it. And that's just getting into the psyche of the body. You're able to learn and absorb it a lot quicker. What we don't practice, we forget. You might get a degree, you might do a job, but if you haven't practiced for years or months, you tend to forget, and you have to get back into the routine. So the best way to learn how to invest and trade is just actively do it, whether it's practicing through demo accounts or actually placing trades. So I've touched on this before, which is about the Fibonacci cycles, which I've studied since 2003. And that's when I first started trading the share market. And I looked at this using an Elliott Wave principle, which is a book written by Robert Prechter. And he nominated that there's a cycle that happens every 18 years as a guide. And when I jumped in the market, this was the time I jumped in the market, and I'd made about $12,500 to $15,000 out of luck, it looks like, for the first 3 or 4 months trading options. But I started going short the market, expecting it to still go down, without realizing that the cycles had actually ended and the market rallied, and we had a nice boom for 3 to 4 years. Right, so this cycles does work. I've gone through it, I've watched it, and we're about to start the same cycle now. So just to recap on what they are, these first cycles here is a 9-year cycle at the tops, which is 1991 to 2000, and then from 2000 to 2010 it's another 10-year cycle, and then it goes from the next one will be 8 years, which is where we're up to right now. 2018 is the next peak, and then if you go to that, the next peak from there will be 2027, and then following that is 2037. So this has been working like clockwork pretty much since the 1800s, and I've gone back and tested it. It's probably another topic. But then it runs in cycles where it picks the next low, which is 16-year cycle from 1995 to 2011, and then from there it's an 18-year cycle going across to 2029. So all we're doing is getting a pre-warning of what's coming up in the cycles, because we have consistent cycles ranging between 8 to 10 years. And so this chart's just confirming that we're looking at a high in the market right now, which is all the fundamentals are leading to that as well. And I'm going to show you some slides to confirm what we're seeing in terms of the US sectors. So if we move across to some of the other work that we're currently doing, this is one in cycles, which is similar to what I've just shown you, but on a shorter time span. So what we have, these smaller scales, and if you have any questions, guys, feel free to ask. But these cycles, the lower ones here, are a 9-day cycle, and then another 9-day cycle, which is picking here the bottoms, right? Each time it's the lows in the market, right? And then you have another cycle, which is an 18-day cycle, and then that's picking up the highs and lows. So if you have a look here, from bottom to bottom, and then the next one is the next bottom coming across. So this is just cycle work we do, which allows us to see what's coming in terms of forecasts, and it happens regularly, and that's why we like using the indices where this is the S&P 500. And so it's just a bit of a forecast of what we're expecting over the next few weeks. So this week we are expecting it to possibly fall down to this level, but we'll have a look at those charts, look at the 5-minute chart shortly as well. So that's one of the cycles we look at, but then there's further cycles we do, which is using Hurst cycles. Now I've mentioned this in the past, and it's just a bit of a pre-warning to what's coming. But we don't use this just alone. We use other cycles to confirm it. But this is just to give you an idea of what we see happening for the next probably end of this month. Right. So the cycles are showing that we're seeing potentially weakness, and what we call it down the bottom here is just clusters of all those cycles I'd shown previously, like a 9-day cycle, an 18-day cycle. Then we also go 9-month cycle, 18-month cycle, 36 months, and 54. And then we also go into a 9-year cycle, right? So this orange line is taking consideration of all of those factors, pointing towards that these cycles are hitting a bottom around the end of this month to early August, right? So they're showing pre-warning that we could have a little bit of weakness for this month. And so what I want to show is actually a current chart of what we had for the last 2 months, right? So we've had a sideways movement, which has been difficult to trade because we're not really going anywhere. So this showing the points up here, this is the high that the S&P 500's hit, which was 2,451, but then we've also had a low of 2,405. Right, so it's had a range of only 44 points for the last 2 months, which is, you can see, well, if you can see this line here, this is clearly showing that a downtrend's in place, but it's not confirmed because we haven't had the bottom down here, which is called support, taken out. So at the moment it's been difficult to trade because it's just going sideways, but we want to see what warnings are coming up, what the precursors are to where the market might be heading. So one of these precursors that we see every month, we have what they call the non-farm payroll change, right, to indicate whether the jobs are growing or declining in the US. And what you find is that this actually, I'm just going to bring the next slide to show what we have. It's first Friday of every month. And this is a report you can see. So you can go on the website. There's a website called EcoDay, where you can just do a Google search to see what's happening. But this is the report that we're looking at, right? So last Friday, on the 7th of July, we had at 8:30 in the morning before the market opened, we had a pre-warning to have a look at these numbers. And when the economy is growing, here, you can actually see they're expecting numbers to be around 250,000, shows that it's a healthy recovery, that the market's moving up. But on average, the market's still been declining, right? So here we are in a boom, which has been, one of the greatest booms we've seen since the 1920s, where the stock market's gone up 7 to 8% based on the government's printing free money. And I've touched on this before, but it's just looking at the warning signs of what's coming. Now, I believe that we are going to see a strong rally later part of this year, but at the moment all the warning signs are showing that we're going to see weakness coming in between August and October to show the market could have a bit of a correction, and then I'm waiting to buy stocks because it's going to be a great buying opportunity coming into Christmas. And so what we also have, when you have this report come out, it affects the gold movement, and it gives us a bit of a warning to what's happening in the S&P 500. So I'm just going to show you the next chart. So I've gone through, this is a chart on the gold stock, right, the gold futures. And if you have a look, most of the time, except for during this period of February and March, each time we have a report, there's a movement in the gold price, right? It's either the top or the bottom of it most of the time. February was a continuation, so it didn't quite happen there. But if you look at March, it was the top of gold, and then it rallied down to the bottom, which was the that 1 month cycle. Then we see it again. Nice pattern. It's gone to the top. It's calling the top for gold no matter what's happening. It's just going the opposite direction. But if you have poor job numbers, which I've highlighted here in the red, that's actually the economy, or the actual S&P 500 will go the opposite. That will go down, but then gold rallies. You can have a look. We had a nice strong rally. So this is a precursor to actually just trade gold with consistent range. And then if again you've hit the top once again, you've hit the bottom, bottom, top. Can you see a pattern here, guys? It's just consistent, right? There's a consistent pattern showing that when you come to the first Friday of every month, the gold is reversing. So we've just had the same pattern occur right now. All right, so we've just had gold go to the bottom. Is it likely to go up? Well, I want to see it break above here, but if that's the case, we're likely to see gold move up here for the next, the rest of the month. So it's a good, how do we make money from that? We can just look at going long on gold once we get confirmation of those technical indicators or a good entry signal. Does that make sense at the moment? Marcus, you probably could appreciate that.
Yeah, definitely.
Right, so it's just giving us a pre-warning, but that's one part of it, right? I'm showing you one element of what we're looking for in gold and how to make money trading the markets, especially even if it's going choppy. Right, so the next one here is quite interesting. We had a talk previously about smart money and also retail money, or they call it the dumb money. So this is what you might not understand, but I'm going to explain what we're looking at here. This is called the commitment of traders forecast, right? And at the bottom here, you can see it's released every Friday, right? So that's the 6th of June. Is showing what the smart money is doing, right? So the smart money are looking at the indices. They're not going long, right? They're going short because there's 180 contracts long in commercial, but majority of them are actually 334,000 have gone short, right? The dumb money, which is the speculators, the retailers, is the opposite of what the smart money is doing. So it's already letting us know what's happening, right? Now what's happening, you've got the indication of the shorts changing to over here. Now this is gold, right? This is the gold futures. So it's telling us now they've actually gone short. The smart money went short on gold. And let's have a look what happened, right? Here's June. This is when the smart money started being short and the retailers were long. They knew it in advance before it actually happened. So there's already a precursor to what the market's telling us to what's happening, because the smart money, the actual big institutions, are already giving us warnings on Friday afternoon. So, when you're looking at trading, we want to follow these trends and follow the cycles. So if we have a look at the next indicator, which we're looking at again, this is the S&P 500 of the a commitment of future traders. Let's have a look at what the future traders are doing right now. Alright, so here's your, it's pretty much 50-50, but you've got your retailers here are more long on the S&P 500. Right, we already see that the smart money is going long gold now, but what are they doing? They've actually decreased. If you can see here, they've decreased their holdings in long on gold on the S&P 500, and they're now shifting to being more short on the S&P 500. So they're giving us a precursor again to where the S&P is heading for this month or maybe next month. But at this stage, it looks like we've got an opportunity to short the S&P 500 if we have the technical breakouts. So the other way, what you want to look at as well when we're trading and looking for indications of where the market's heading, we want to look at the sectors and the industry's performance. Right, so this is a look at all the major sectors in the US, for the last 10 years. And what we're looking at here, right, so we look at energy. Energy has actually been hammered for this last year, right? So it's down, if you have a look here, this is an arrow showing that what it's done for year to date. It's down 14.1% when the actual S&P 500 or the Dow is up about 8 or 10%. The rest of the sectors up quite heavily. There's the tech sector, which is showing weakness, coming into a little bit of weakness. Industrial's up at 9%. If you follow it all down, the other sector that's weak has been communication, right? So these are the sectors we're looking at, giving us a pre-warning of what's happening. Now, if we look at this, it's been pretty much, I'm just going to highlight all of this area here for the last 10 years. If you can have a look, most of that's been up, right? Most of the sectors have been green, strong growth. But what we've seen a shift. In the last 3 months, we've actually now seen a bit of a shift. Look at all the red indications coming up, right? So we're coming into that cycle that we referred to, where we have the seasonal cycles of where we're coming to weakness this part of the year. So I wanted to again highlight, this is the Dow Jones Industrial Average since 1886 to 2012, and the statistics have stayed the same, right? So what we're coming into, this is what we normally would see, a little bit of weakness in May and June, right? But it's gone sideways. It hasn't really given us a lot of indication. It's made it difficult to trade. But what they're showing is they're expecting strength to come in. But looking at the industries and the sectors, that may not happen for this month. We may see weakness for this month, growth into August, and then we're going to see a strong September, October weakness. And that's what the charts are telling me. That's what the fundamentals are indicating as well. So I want to show you the background on those of what I'm doing with the research. But now what I want to do is show you the sectors where I'll highlight a couple of charts of possible trades coming up for this week and this month. Before I move on, is there any questions based on some of those sectors and those charts I've shown?
No.
No, you're good, Marcus. Trev, any questions?
Yeah, no, all good.
Anything for you, Alan?
No, all good.
Excellent. All right. So we'll move on to these trades. So I'm going to show you some of the trades. Now, the trades I'm showing are basically just going to be the charts, right? I haven't even highlighted the fundamentals on these. When I dig deeper, I actually can look into the fundamentals. One of the trades I have actually placed on the StockPicks website for this trade for this week. I'm going to show you there's a last chart as well. So look, taking into consideration all the sectors I've just shown you, here's some of the trades that are looking for a breakout, right? So we spoke about last week about looking for trades for new highs and breakouts. Here's a perfect trade that's looking for a setup for a breakout, right? So we've had consistent breakouts, right? This is a level of what we call resistance and support. It's now broken out, so it tested it, couldn't break through. It'll break through the first time. The second one's more powerful, right? So here we go. We've got the confirmation. Now we've had another support level, which has been this level of 9 in, and now we've had another breakout. So this is one of those ones that we can see potential upside. Now I haven't looked at the fundamentals, but I just wanted to show you some charts of some trades that potentially have some upside right now, even though it's been difficult to trade for the last 2 months because we've had that sideways movement. Here's another one that's had a great breakout. This was a trade that showed us technically a good uptrend. So we can see that we had a downtrend previously, clearly in the downtrend, but then what we had the breakout, and then now what we're having higher lows. So we start from this bottom here, we're now getting higher lows and higher highs. So this is a nice technical trade to look at the upside with the potential around $50, which is this level here, right? So you could look at a $2 or $3 gain, but it's got the upside to get to $55, right? So it's another great trade, potentially looking for a setup for a long trade. Because there's been a lot of shorts that we've been finding, but now I want to show you some of the actual long trades that we see coming in. This is Twitter as well, right? So this has been holding back. This is one that's held back compared to we've had Nvidia, Facebook, Apple, a lot of the tech stocks, but Twitter has actually been quite, just been reserved. Now what we're seeing is one of those confirmations for a technical breakout. This is a moving day average it's crossed. It's now forming a bottom down the bottom here of support. It's had good volume on this breakout. And now what we want to see, this is the level that we're waiting for to see if we can have a breakout from there at $20. But this is another setup for a long trade to potentially test this previous high. So we're looking at around $24 on Twitter. Right, so we've just got to monitor and wait because we're seeing weakness coming into that sector. But this is one of the stocks that are undervalued at the moment in the tech sector. If we have a look at it, we've got another breakout that I've just found as well. Again, this is Square, which I think you mentioned before on this one, Marcus. I believe this is where they're doing the Winks, isn't it? It's one of the websites where you design and create yourself. So
sorry, Squarespace, yes.
Yeah, so I believe this is Squarespace, right? So it's the one thing I don't like about this one, there's not a lot of history, but it's a breakout, right? So it's only got, since probably back here, what is it? Probably about September 2015. So it's only got about just under 2 years history, but it's in an uptrend. Compare that to Snapchat, which was valued at more than say American Airlines, which was crazy. Valued at like $80 billion. This was right. And Snapchat had nothing to sell. It's not even making any money, but it was valued at $80 billion. Now it's coming back to a realistic price, and it's going to be a stock that's going to struggle to go higher unless the techs break out again. But this is clearly, you can see, it's been a nice breakout. come back down, and it's going to new highs, right? So it's just had a breakout. So this is another stock to watch. If we see any weakness on this coming back to around, say, $20 or $22, this could be another opportunity to buy, but we've just got to watch out for it. But the other great thing about this one is we've had large volume coming in, right? So it's another indication that the uptrend's confirming on this stock, right? So, but we want to now look at possibly a couple of trades. This is another great one. Last one I had, it's setting up for a long trade, right? So what we've had, look at this big spike in volume. Now what's that telling me? That's telling me that the smart money likes to look at this stock, think it's undervalued, and they're jumping in just before earnings, right? So this is potentially one of those trades that we can just keep an eye on, but I believe it's probably a great setup. This only had high volume probably about 3-4 sessions ago. So it's broken above the 50-day moving average on great volume. This could be one of those trades that could actually spike up about, in this region of about probably $10 in the next 3 or 4 trading sessions. So there's some of the indicators I'm looking for long trades. But now let's look at some of the weakness in some of the other sectors that actually is setting up for a drop, right? So we've had some really good indications looking at those sectors. Now this sector here is the retail sector. Now what can you see here? We've had a clear break of the 200-day moving average. We've had a break of the 50-day moving average, and the volume's increasing, right? And also for the last month, what are we seeing? Well, actually for the last 2 months, this sector has been declining, right? So it's setting up for further downside. Here's another peak, right? This is the peak of it back in 2016. The sector went down, right? That was July. If we have a look at back in again in July the year before, it went down, right? So we're seeing weakness in these sectors and the setup's there. And once these sectors broke these moving averages, they continue to decline. Right, so even there we had a break as well. So we've got a nice setup potentially. So what we want to do is find stocks in this sector that's setting up for weakness or have already gone down. So what we have here is one of the ones that's already gone down, right? We had Costco. That had weakness, right? So we have an entry, exact same crossover, which we've just seen, and then the weakness has dropped down. And look at all the volume, right? So the smart money was already dumping this stock up the top here. Right, so they already know. So this may have already dropped a little bit too far. So what I want to do is I want to find stocks that haven't dropped this far yet. I want stocks that have set up, that have broken below the 50-day moving average, but haven't quite gone below the 200-day or just broken it. So we've found a couple of those stocks for this week, right? So let's have a look. There's one there, right? This is a beauty salon, which I actually picked this. I actually sent it last night. I was in there about to buy it at 370. Unfortunately, by the time I went to get into it, it moved so quick I just didn't get into it, right? But it had a beautiful setup. That also has probably got more downside, so we just want to look at it. Now, even though it's a $255 stock, if we use CFDs to trade this, you're only using 5 or 10%. So you could pick up 10 shares of this for like probably about, I think probably $120, right? So that could actually pick you up $120 worth of stock or profit in a very short time just by controlling 10 shares. Now here's another one that's set up beautifully as well, right? It hasn't quite broken, right? Perfect, right? This is what we're looking for. We're looking for a stock that's just sitting on the 200-day moving average. It's right around the support level, which is across the board. You can see it's been tested so many times. This is a nice setup. Now I like to look at this one, and I'm already in this. This was a recommendation I think on the StockPicks trading website as one of our trades probably about a month ago. We actually picked it to get into around here just a little bit earlier. But I like to look at this one to go short, to head back down, because you can see that the actual sector itself has already dropped. So I'd expect to see this level somewhere around $70 to $66 by the end of this month, provided we get that fall in the market, because we're getting those early signals. Here's so yeah, there's some nice setups. We want to get the early signals for this. Here's another one, right? Home Depot. That's exactly like Costco, right? And what did Costco do? It's already dropped below that 200-day moving average. So we've got a nice setup here. The only thing it is hasn't quite broken below that support. If we get a break below probably 148, that would be an entry, and we'd see about a $10 move. Right? That would just bring in line with the industry of the sector itself and what Costco has done. Right? So there's a nice setup forming on those trades. So I've got one more chart left. Which is a trade that we actually put on for the StockPicks Made Easy members. And this one here is lined up as well because we've seen what we talk about. We're looking for that crossover, right? So we had that crossover. We had large volume supporting that the smart money's taking money out of this stock, and so we're seeing that this could pull back, go a little bit sideways, and then get a bit of sell-off later in the month, and take it to our target around $21. And all we're looking for is about a 3-point gain on this stock. So that was the what I want to show guys, is because we've been talking a lot about theory, we've been talking a lot about the setups, but I want to show you behind the scenes what's actually been happening. And so when we look at these trades, we've, you know, it's just one of those things that actually, if you take your time and we look at the bigger picture, we have a few drawdowns through the difficult months, which what we've had, but having this pre-warning of what the market's bringing into, and then seeing that buying opportunities at the end of October for the Christmas rally, we'll be able to, you know, pick up some of those losses we've had, or drawdowns for the last couple of months. So that's it for the presentation. I hope you found it useful for tonight. And before we go, I'm going to actually bring up some trades that we use, or that we placed last week or 2 weeks ago. Alan, we can probably look at yours as well, because we did it with plus 500 account, and we placed some trades. But I think one of them was Urban Outfitting, which went up and went down, and it's had a nice return for the last probably 2 weeks. So have you guys got any other questions about those charts before we get on to looking at some of the returns we've had on the trades? Okay, so let's have a look at the trading results that we've had for last week, for some of the trades we put on. So mentioning to traders, one of the misconceptions that I'm seeing out there, and even we've been guilty of as well, you know, we had a success rate in 2015 and 2016 with our cycle work taking, you know, a small profit. We had a success rate of 94%. But we discovered that you can actually be more profitable or trade, you know, have a better trading style by actually not worrying about being right all the time, but actually just placing trades that have a likelihood of being successful, but, you know, cover it for the long side or the short side, so you're covered in both directions. And as you can see here, we've got 5 trades open at the moment for this week, and we've had 3 losing trades that are still open, but we're actually up $660 for the week, right? So this is what trading's about. It's totally opposite to what we're taught at school, totally opposite to what we're actually taught in our job, where we have to succeed, always be right. It's not good to make mistakes. You know, if you come in second, you know, you're a loser. I mean, that's the kind of mentality that actually will work against you in trading. When you take losses, it's just a natural game. It's a natural process of money in, money out, and I call it the cost of doing business, and these are just drawdowns. But if you can make, as you can see, for this week, we're currently up 200%, right? Last week we made $400 on the closing trades. So it's just based on numbers, right? So I'm going to show you the trades that we placed, all the trades we closed out last week, and the trades we're currently out for this week. And then also I'm going to show you the 4 trades that we put on for educational purposes, to show you the trades that we're placing based on the charts. Right, so let's have a look at the how we went last week. The trades we've closed out for the week, right? So again, look at it. We've had 3 winning trades, and we've had 2 losing trades, and those losing trades were out by literally timing was just out for it to be great 5 winning trades in a row. Gold actually went up just after we got into this trade, which was a short play. As you can see, it's currently up to $1,218. Which would have made this about a $400 gain trade. And then the US, the NASDAQ, when we placed this trade, we got stopped out, and then it rallied down 60 points, right? So even though we lost, we still made, down the bottom here, we still made, you can see $400. So they're the trades we've placed. At this stage for this week, we've made, in the last 2 weeks, we're up $1,000 on the account. Now let's look at the current trades I've put in place, right? These are the trades that we've put on this week, based on the charts we've previously shown. So we've got 2 short trades and 2 long trades. Alright, so you've got this one here, which is the trading symbol for this one is SWM. The one below, I'm just trying to think of this, is SKT is the trading symbol. So you can just go up the search engine at the top there, type in that stock, and there you can go there, right? So that's how you look at trading. I'd encourage everyone to just open up a plus 500 demo account. That actually just lets you trade with not even using your own money, and you get to learn how to trade, right? This is one of the trading platforms we use. This is not the only one, but it's a good start. Typically used for the Australian market. For the US markets, we'd probably recommend using Ameritrade. Again, some of the trades that we look at, all the symbols, can't always be used on this. It's limited. But again, if we just find a different stock, there's plenty of opportunities each week, even in a sideways movement. Looking at here, we've got the other one, which is the core Laboratories, and then Home Depot, which we also looked at this week for the short side. There's our trades for the week. We'll have a look at this again. Recapping, we'll do a small one next week. Hope everyone's enjoyed it. So if you want to check out more of stockpicksmadeeasy.net, or you can also go to stockpicksmadeeasy.info, which is our landing page, just to give you a bit of a promo of what's possible. And you can also try a 14-day period, no charge, just to see how it works. I hope you've enjoyed the session for this week. Have a great weekend. Have a great, successful week learning how to trade. All the best, and bye for now.